Please subscribe to our channel and press the bell icon to stay updated with the latest Bitcoin news, cryptocurrency trends, Forex market insights, commodity forecasts, and expert technical analysis. Join our growing community of traders and investors, and never miss an important market opportunity. Imagine a company that can launch rockets into space for almost nothing. A company whose technology is so far ahead of its competitors that analysts describe its advantage as an ocean rather than a moat. A company that could generate over $90 billion in annual EBITDA within just a few years. That company is SpaceX. And according to analysts at Wolfe Research, SpaceX may be one of the most valuable businesses ever created. The firm's recent coverage initiation includes a price target of $175 per share, even after the stock surged nearly 20% on its first day of trading. But what makes analysts so bullish? Why do they believe SpaceX has fundamentally broken the economics of space travel? And could this be just the beginning? Let's find out. SpaceX recently made history by completing what many are calling the largest IPO ever. Investor excitement was immediate. Shares closed nearly 19% higher on the first day of trading, pushing the stock price close to $161. Yet despite this impressive rally, Wolfe Research believes the company still has significant upside. Their target price of $175 suggests that Wall Street may still be underestimating what SpaceX has built. But the analysts aren't simply looking at today's numbers. They're looking at something much bigger, a transformation of an entire industry. For decades, launching anything into space was incredibly expensive. Governments and private companies spent billions of dollars for missions that often delivered relatively small payloads. The cost of reaching orbit remained stubbornly high. Then SpaceX arrived, and everything changed. According to Wolfe Research, the biggest reason for SpaceX's dominance is one simple concept: reusability. Traditionally, rockets were used once. After launch, expensive hardware was discarded and destroyed. Imagine buying a new airplane for every flight. That was essentially how the space industry operated. SpaceX challenged that model. With the Falcon 9 rocket, the company developed the ability to recover and reuse the first stage after launch. This breakthrough dramatically reduced launch costs. Competitors have spent years trying to catch up. Most still haven't succeeded. But SpaceX didn't stop there. The company is now betting on Starship. And Starship could completely redefine the economics of space travel. Unlike Falcon 9, which only reuses its first stage, Starship is designed to be fully reusable. Both stages return. Both stages can fly again. And both stages are engineered for rapid turnaround. This means rockets could potentially operate more like commercial aircraft than disposable machines. According to Wolfe Research, this innovation could reduce launch costs to levels the industry has never seen before. The numbers are staggering. A Falcon 9 launch currently carries roughly 20 tons of payload. Even with reusability, launch costs remain around $14 million per mission. But Starship changes everything. Wolfe estimates that Starship could launch more than 100 tons of payload while reducing costs to as little as $3 million to $5 million per flight. Some estimates suggest the true minimum cost could eventually approach $1 million. Most of that would simply be fuel. Think about that for a moment. 5 times more payload. Less than half the cost. Potentially a fraction of the cost over time. This is why analysts believe SpaceX has effectively broken the industry's cost curve. The company isn't merely competing against other launch providers. It's operating under a completely different economic model. And when your costs are dramatically lower than everyone else's, you gain a powerful advantage. You can lower prices. You can expand capacity. You can enter new markets. And you can generate higher profit margins. This is the foundation of SpaceX's extraordinary growth story. Wolfe Research made a fascinating observation. Most companies build competitive moats. SpaceX has built an ocean. The firm's analysts argue that near-zero internal launch costs create one of the strongest competitive advantages ever seen in modern business. Because SpaceX owns its launch infrastructure, every new satellite deployment becomes dramatically cheaper than it would be for competitors. This advantage compounds over time. Lower launch costs allow more satellites. More satellites create better service. Better service attracts more customers. More customers generate more cash flow. More cash flow funds additional growth. This cycle becomes increasingly difficult for competitors to match. According to Wolfe, this could support approximately 70% top-line growth while nearly doubling EBITDA margins by 2030. And remarkably, the analysts believe the company is only getting started. While rockets often capture headlines, another business may become even more important: Starlink. SpaceX's satellite internet network has quietly grown into one of the world's most ambitious telecommunications projects. The company is competing directly against traditional broadband providers. And according to Wolfe Research, it is already becoming an economic success. A major milestone occurred in 2024. Starlink's EBITDA minus capital expenditures turned positive. In simple terms, the business began generating meaningful cash. That's a critical turning point for any fast-growing company. Now analysts see enormous potential ahead. Starlink continues to expand globally. New markets are opening. Capacity is increasing. And millions of customers remain untapped. Wolfe projects that by 2030, Starlink could expand network capacity by approximately 12 times. That growth could transform the company's financial profile. Perhaps the most eye-catching forecast from Wolfe Research involves future profitability. The firm believes SpaceX could generate more than $90 billion in annual EBITDA by 2030. Even more impressive, they project over $70 billion in EBITDA after accounting for capital expenditures. These are numbers typically associated with the world's largest technology companies, not aerospace firms, not telecommunications startups, and certainly not companies that were once considered experimental. If these projections prove accurate, SpaceX could become one of the most profitable businesses on Earth. For decades, humanity viewed space as expensive, difficult, and accessible only to governments. SpaceX is changing that perception. Through reusable rockets, lower launch costs, and the rapid expansion of Starlink, the company is creating an entirely new economic framework. Wolfe Research believes this advantage is so powerful that competitors may struggle to ever catch up. Whether the stock reaches $175 or goes even higher remains to be seen. But one thing is becoming increasingly clear. SpaceX isn't just participating in the future. It's building it. And according to some of Wall Street's most bullish analysts, we're still witnessing only the beginning of the story. If you enjoyed this analysis, make sure to subscribe and turn on notifications for more deep dives into the world's most disruptive companies and investment opportunities.